Yo, what's good, everybody? Hope you're all doing well. Welcome back to another market breakdown. So, in this breakdown, I'm going to go through 5 pairs. Okay, I'm going to go through gold, USD JPY, GBP JPY, GBP USD, Euro USD, and even probably NAS 100 as well. The benefit of this video as well is the fact that I'm going to be marking all these charts up from scratch. Okay, I'm going to show you like short-term sort of bias. Maybe it's an intraday perspective, a little bit of a swing perspective of what I'm expecting from the market. So the benefit is you're literally going to see me do a full top-down analysis from scratch on all of these pairs. So make sure you watch this video right until the end. Okay. Again, I don't like always coming across as bragging or like showing off in that sense, but at the same time you have to understand that I am a verified sort of mentor in this industry. I've got over $375,000 in payouts right now, sort of approaching $400,000 in payouts just with prop firms alone in the last 2.5 years. And you guys have seen my consistency when it comes to calling out trades live, publicly. Literally, this trade right here on the 23rd of September, if you were in my group, this free Telegram group right here, you would have seen me call this trade out literally publicly live in front of thousands of you, and literally loads of you guys made money on this trade. I personally made, I think, 12%, which is $24,000 on this one trade alone, which is absolutely insane. It actually recovered a challenge for me that was down 5%. So I was down 5%, and in one single trade, boom, we not only made 5%, but we made an extra 8% or 7% on top of that, successfully recovering the challenge. And that's again the main thing. It just takes one good trade and with the right risk for you to go ahead and really hit those challenges, maybe even hit home runs on those trades. And I've got another funny story for you guys a little bit to the end regarding one of my payouts with one of the prop firms, which we'll get into later on. And yeah, I want to know what you guys' opinion is on this. If you can maybe DM me about it, I'll be more than open to hear your guys' opinion on it. But yeah, stick to the end and I will mention it. But anyway, let's get straight into the breakdown. Just before I do that, actually, if you guys haven't already, go ahead and look at the Funded Fast EA group. I'm going to attach a link to this video right here to join this. Why am I saying this? Is because, guys, the results have been absolutely insane. I've never done anything like this in my entire life, but for the last 2 to 3 months when I have been publicly promoting this or showing the results of this, it's been insane. I've never seen anything else like this, and the reason for this is because we've actually put time and effort into it, unlike other people out there. These other gurus, other mentors selling these types of automations just aren't legit. It's as simple as that, right? They haven't put the time and effort into building it, whereas me and my team have. Over the last 1.5 years, we've been trying to build it in the background, beta testing it, giving it out to our small communities, literally for people to test, and now the results are showing. And guess what? You get full one-to-one support, daily settings from our developer, you get free access to my London live signals room, and once you join, make sure you DM me to get the details on how to do that. Everything is right here, and yes, the hand is literally held. And one thing I'm going to say, guys, when it comes to finding success in the markets, as a trader right now, I'm going to tell you the best way to focus on the skill set and the best way to catch, trades like this and understand pattern recognition and get into a strategy is by having peace of mind. And I'm not going to say to you, guys, this robot right here is going to make you $100,000, $50,000, $20,000 in the first month. No, but what I can do is scale you to that 5 figures a month. Why? Because we have consistently proven that this robot, especially on prop firm accounts, can make 2, 3, 4, 5, 6% in a single month really easily. Literally, if we scroll down right here, this guy made 2% in 2 days on his $100,000 account, right? Just under, as you can see right there. My first 24 hours running the EA. We've got tons of proof. Literally, my FX book results right there from our own clients. We've got screen recordings for days, we've got forwarded results, we've got certificates, we've got verified payouts metrics from our FTMO, and guys, nobody else is doing this. So make sure you go ahead and join this group, make sure you go ahead and apply. And again, one thing I'm going to say is just give it a go, just give it a trial, give it a chance, because as you guys can see, clients over here are making 2, 3, 4% on their own challenges or on their funded accounts. And now when you have that running in the background, you don't have to worry about passing a platform challenge so easily, so stressful, right? You can do it so calmly, so easily. And on top of that, we're holding your hand throughout the whole process. We're not like all these other people who are just giving you the files and letting you figure it out along the way. No, we literally make sure each one of you guys are up and running. And again, our robot works with a specific strategy, a specific timing, and a specific session. You will get all the information once you've joined, and we will be hosting more interviews from this week onwards. So remember, go ahead, apply. You will be contacted via email, and again, you can't just get access to it like that. You have to go ahead, click the pin message, go ahead and apply, and these are all the benefits that it comes with. So again, don't want to go on for too long about it. Just give it a shot, guys, and you will see some insane results. Remember, $10,000 a month is a realistic amount you can scale to. $200,000 account, 5% a month. you're chilling, right? So I want you guys to take advantage of AI and automation, and also take advantage of the knowledge I'm about to give you right here when it comes to manually trading as well. Why? Because I'm doing both myself. So without further ado, let's get straight into the breakdown, and let's go ahead and cover this trade right here, which I actually went ahead and gave you guys on, I think, let me just go ahead and expand this. You guys will see right here, this trade right here. Okay, if we go here, with this recent sweep of the equal highs on gold, we can assume a distribution of this price is to follow for a short term at least. This would follow the three-step process of the power of three, right? It's a high risk area, but we are also selling high. Remember, the aim of this game for me, right, is to sell high and buy low. And yes, that is a bit subjective, but if you have that in mind and you are buying at low areas or you're selling at high price points, you are doing yourself half the job right there, and you're halfway to success. Yes, believe me, it's that easy. Selling high and buying low, right? Now anyway, what was I marking up here? What did this even mean? So if I go ahead and explain to you guys what the power of three simply means, the power of three is a simple three-step process. What does it mean? It means consolidation, okay, manipulation, and then distribution. What does this mean? Whenever you see a gigantic move in a single direction, whether it's up or down, guess what? Just prior to that move, you will always notice a specific fake out, right? And what is that for? The reason for that is to accumulate all these orders over here, right? In the accumulation phase or the consolidation phase, people are seeing that this is a resistance level, okay? So they're going over here and they're selling here, putting their stop losses above here. They're seeing a reaction, they're like, yay, I'm in profit right now. Then it's coming back up to their resistance and it's again respecting it, and now it's pushing again, and they're like, yay, we're going to go ahead and, you know, continue, right? And push in our favor. Same way for the downside. People are also buying here, they're seeing a bounce, and they're continuing to buy over here again and buy over here again with their stop losses right underneath. What does the market do prior to a quick move? It first of all takes out the opposite end, which is these sellers over here, by hitting their stop losses, and that then releases liquidity, and that in the end, in turn, quickly then sweeps out these traders over here before maybe they can move. You can think of it logically like, you know, to give yourself a little story, before they can move their stop losses to break even or close out the trade, the market's impulsively moved in the direction it wants to go and then taken them out, right? That's the kind of basis behind trading overall. Always there's going to be a consolidation, a build-up of liquidity, there's going to be a manipulation of liquidity, and then there's going to be a distribution of money right there. So when it came to this market, when it came to the trade over here, what did I see prior to this move? So if I go in replay mode right now and I'll show you guys, if I go backwards, what did I see? I saw two equal highs over here. Now, what do these equal highs act at? At a ultimate higher high. This was like highest gold had ever been. Literally, the market made a higher high, and then it made an equal high right there. What is this known as? A double top, right? Now, the average person, when it comes to a double top, would go ahead and see the double top act like this, break of structure, retrace, which is fair enough to do, and then continue to the downside. But the secret to this double top, guys, which I haven't really said much, is if this high is also swept, this break of structure and then this retrace right here has a very high probability of it being a lower high, right? Because the market has swept the previous high, it's given a break of structure, retracement, and now you can safely put your stops above the high and aim to the downside. Now, with that being said, what happened here? The market didn't actually sweep this previous high. Instead, it actually went ahead and acted as a previous level of structure or resistance. And then what I saw the market do was simply sweep this level of liquidity. And that in turn saw me see this as a liquidity grab. Following this price action, following this manipulation, what did I then see? I then saw the market impulsively break to the downside, right? Now, to be completely honest, this was not the most impulsive I've ever seen it. However, it was still valid. Why? Because on the 3-minute time frame, I went ahead and measured this type of, where's highlighter? I measured this type of impulsivity, right? This momentum, let's just say, compared it to the previous, side. So there's only two sides. There's only buying and there's only selling pressure. So when I saw this bullish move, I saw ultimately that this market the market right now is not really favoring the buyers right now. Instead, it wants to really push with momentum to the downside. So you know what? My bias on that side was, at this point right here, I will gladly take this as a break of structure, especially because the bodies have closed below the previous market structure low right here. With that being said, I now class this area here as a simple break of structure, okay? And with that being said, right now you can simply go for a Fibonacci short on the 5-minute time frame, and you could have done it from a lower high point right here, but this was not a strong enough move to do it before. What I would have rather said was to go for a simple retracement play based off the Fibonacci from this high to this low, right? Because these bodies have still broken below these 5-minute bodies, and you could have looked to enter anywhere in the golden zone, anywhere around here, with a stop loss above this high right here, for example, literally 25-30 pips, and then look to target these extension levels for a 1 to 2, or go ahead and target the next level of liquidity. And actually this area was my take profit zone. Why? Because I was looking at this imbalance to be targeted, and again it's lined up very nicely with my minus 61.8 on the Fibonacci extension, because again, if the market was bullish, which it very much was, the market could simply continue trading this as a higher high. This may have just been a retracement I would have caught to then see the market potentially continue higher. So I would want to be out at this point around this region here, right? And what did the market do? Let's have a nice look at this. The market then tapped into our entry at around 0.561.8 area, and then it just continued to melt in our favor, came right back into our fair value gap, and again from here, don't know why it lagged. I might just pause this right now and see what happens. Okay, it seems like we're back. And anyway, from this point right here, the market melted crazy in our favor, and then eventually took out this low as a liquidity grab, tapped actually into this level of demand on the 5-minute time frame. If you just paid attention, clean order block right there, and then the market did what? Continue flying to the upside. Now, what was this? Some of you may know this as a complex pullback, and rightfully it was. So that was the trade. I don't want to overcomplicate it too much. Simple liquidity grab, simple break of structure, get in and actually trust your analysis. The main thing is, with a lot of you guys, you're just scared to enter a trade. You know what, guys? Listen to this. When you have a simple, repeatable process, you then have consistent results. It's as simple as this. When you have a simple, repeatable process, you have consistent, measurable results. What does that mean? It means when your execution and your exits and your trade management is simple to understand, you can then simply measure that. You can simply monitor that. And when you can simply monitor something, you can then journal it a lot easily. And then when you can journal it a lot easily, you can then look back at it and review it a lot more easily. And when you can do that easily, guess what? Your brain then finds out ways to repeat that same move over and over again. Why? Because it's easy to understand. So when it's something easy to understand, you will then understand that this game isn't about making it more and more complex. It's about making it more and more simple, and then just risking more. There's nothing wrong with more risk. Do not call me or anybody else who just risks high a gambler. No, a gambler is not that. If you risk high, that means you believe in it. You must trust your analysis. You need to have that self-awareness about you and your trading ability and your trading edge. When you're self-aware about these types of things, nobody, nothing can knock you, and that's how you get these easy payouts. Yes, for some people, they trade 1,000 trades and they scale and they make $20,000, $50,000, $100,000 across those multiple trades. Or some people actually go ahead and take a couple trades, few trades, maybe 2 or 3, and they hit a high profit amount. Why? Because their process is simple and repeatable, and therefore they can go ahead and hit those type of crazy numbers, and it's less stress for them. Now, going forward, what do we see here? So gold right now on the 15-minute time frame, what I'm seeing before I draw any support and resistance levels, I can see the market giving me a nice left, a head, and a right shoulder. Following this right shoulder, do I see this as a break of structure? Now, this is a very tricky one because this is not that impulsive, and if it was, I would have liked it to break this low right here. But what it didn't do was break that low, and instead what it's done is create a 1, 2, potentially 3-leg extension with this lower high being here. Now, right now, I wouldn't like to take a trade at this point. However, what I can do is jump onto the higher time frame and quickly go ahead and look at areas to go ahead and mark out as interest areas. So just off the bat, not looking at it too much because we are higher, because there's not much data to the left, in fact there's none. I'm going to go ahead and look at the 30-minute time frame, and I'm going to mark off this level here as an intraday level. As you can see, 2650 is my kind of key area right here. So I'm going to round it off to 2650. And as you can see to the upside right here, we have gone ahead and rejected from this major level right here, right? So if I just, don't know why it's not marking. So if I go here, you can see these are like rough areas I'm just going to go ahead and mark. And on a more intraday perspective, if you want to look at it from this sort of standpoint, what we've kind of got is like a middle ground around this region here. One trick you guys can use is go into the body chart, and you guys will see, areas of the market's tapping a lot more clearly. Now, once you've got this right here, overall the structure over here is hinting at bearishness, but again, taking sells here is very, very risky. And looking at its current price action on the 3-minute, 5-minute, honestly, I would rather stay out of this. If it looks like a trade you want to go ahead and take, what I would wait for is, since the market has broken to the upside on the short time frame on a 3 to 5 minute and broken above these highs here, yes, it may just be a big pullback to go lower, but what I would look for then, because the market is looking like it's moving corrective, is if we can get a reaction of this area here, I would then look for a breach of this level, right, and then the market to come back and retest any of these sort of support levels. And if we can get enough of a rejection around this region here, then I will look to take the market a little bit higher from this point here. Okay, now before we get to this point here, if you do see some rejections around this area here, then this could also be an area to monitor. So I'm going to go ahead and just roughly mark up this region. I don't want to make it too long, that's why I want to go into these extra pairs and show you guys. We've got this region here and we've got this region here. Okay, so if we're looking at it from two different standpoints of sells and buys, you could then look for confirmations around the 2660 region for some selling confirmations to take the market lower, or you can wait for the market to have a reaction from here, come back into this area at 2653, 2654, show some rejections, and then continue the market to the upside, right? And this is where you could look to trail stops, because again, the market is super bullish. Now moving on to Euro USD. I haven't traded this pair in a very, very long time, but again, I'm going to do my simple analysis for this. And again, I actually called this drop right here on the 23rd as well. Look in the free Telegram channel. You guys will see the analysis I was giving. And overall, we have maintained to continue this higher high sort of structure. So higher lows have been maintained. Higher low, higher low, higher low. And now this potentially could be another higher low. The only thing is that I'm seeing this right here. I'm seeing this right here as a potential liquidity grab. Okay, so if I go to the 4-hour, actually, yeah, the 4 hour is kind of telling a nice story here. I'm building myself a little fake trend line there just to give an idea of what the direction is of the market. I can still say we are bullish for sure, but at the same time, this momentum candle right here does not look promising. However, what you could do is look to mark out our regions from here, and I am doing this pretty quick to not make the video as long as possible. But again, what data do we have to the right? So if we go over to the daily, I'm going to mark out some key daily areas over here, just because again I forgot we do have data on other pairs. So what do we have here? So if I look at this area here, I'm going to mark out this area, and what are we going to have else? What else can we see? And again, this is going to be subjective to each one of you guys. Whether I mark these areas and you may not, it doesn't really matter. At the end of the day, it's about bias and it's about where, not the what. So if I just see a rejection of my area, it doesn't really mean much, right? I might take a trade that you won't, and you might take a trade I might not. So with that being said, we just have to stick to our own biases, and if it makes sense to you, you just go ahead and execute. I want you guys to get comfortable with executing with your own brains, okay? So very simply, what we've got here is a little rejection. So what I could see potentially happening on Euro USD right now is if we can get a small market structure shift around this region here, I would like to see this low here at 1.113, I would call it, no, 1.112, sorry. This area here, if I can see a quick liquidity grab and then a break of structure, I would then look for a retracement to get in to continue higher and correct this move to the upside, right? And again, this could be a bullish move long term because we are overall long term bullish. And short term, this could actually end up in a pullback where you can actually see the market fall to the downside, okay? So with that being said, that is something that I would look for if I was to be bullish. And if I was bearish, I would just wait for simply the market to retrace into areas of resistance, and those areas can be marked out. If I look over around here, yeah, this looks like a good area. Somewhere around this region here. Let me change to intraday. And as you noticed, purple for me is a higher time frame area, and blue is more of a short term. So if we get any sort of rejections around this area here, anything around this area, I would then look to short the market. And if we get a breach, break of structure, continuation, I would then look to target these areas as potential targets before the market potentially dumps to the downside. Okay, so yeah, look out for that. We've got two key areas to monitor, 1.112, and we've got 1.115 for potential shorts and 1.118 for potential shorts. Remember, where, not the what. If you want to see a rejection followed by an engulfing and then enter, put your stops above the previous wick rejection and give it some breathing room as well, and put your take profit in an area which makes sense. Okay, because if we're looking to target this area here, wrong one. If we're looking for shorts, you want to look for an entry around this region here, stop loss whatever the rejection is, and you want to look for something like that. A 1 to 2 is usually more than enough, right? Or even a 1 to 1.5 at the lowest. Now moving on to GBP USD. What do we have here? We have a nice trending bullish environment. So with this being said, I do see the market continuing, okay? And again, trend is your friend until proven otherwise. Now, one thing I do see though on the smaller time frame is a little head and shoulders, break of structure, retracement, continuation. Now again, similar to Euro USD, I'm not going to take too much time on this, but you guys can literally, I want you, in fact, this is like kind of homework for you guys to do right now. I want you guys to mark up GU yourself, because this is almost identical to Euro USD. Yeah, it pretty much is, except obviously we've broken more structure to the downside, whereas on this we've broken one level, clear level of structure. Whereas on GU, you guys can literally see what I'm about to say. It's almost the exact same potential move. This could be a overextended bearish leg. So from here, you can look for a correction of the market to continue to the upside in a corrective manner, and then continue to impulsively recreate. Let's see if this can, to then recreate this type of move, right, once the market retraces. So you can either look for a short around this Fibonacci short area, and again, if we have any data to the left, if I can find any, I will then look for something to base this off, right? Not that this data is too old, this data, still holds value, but these Fibonacci areas do also have power as well. As you can see, this sort of golden zone area is the most obvious, right? Most people will be looking to short around this area here, but what I will look for is a little bit more of a breach of this area if the market can retrace up to here, and then continue to look for shorts around the 61, 70.5 or the 79. And as for buys over here right now, I would kind of hold off for that until we get some clear confirmation. So around this region here looks good, 1.33 flat, okay? And that's just a quick markup right here of another resistance level. And what else can we see? I mean, we got another area lining up with our extension area around this region right here, and the minus 61.8 right here. How many more pips is this? Let's see. So around 60 pips. If it drops a bit further, I would then expect it to reverse around this low right here, potentially creating somewhat of a double bottom. But right now with the recent structure, it doesn't look too promising to continue up. Let's just wait for it to confirm. Once you've got a nice structure confirmation in this region over here, you can then look for sweep, break of structure, retracement, continuation, retracement, continuation, retracement, continuation, and then reversal. So that's what we can look for there. GJ, right now in GJ, this does look pretty nice for shorts, just our first glance on the 15. So with us, peeking out of this area here and seeing this impulsive leg, what I'm looking at right here on the short term side of things, before I go ahead and mark up anything, I would like to see the 5-minute respect, which it looks like it is. This already looks like a nice 5-minute Fibonacci play. It's too late for going to jump into shorts right now. So if these shorts are going to work, you'd be looking at something like this, depending on where this resistance level is that the market has sort of respected. This would make sense, and that take profit would also very, very much make sense as well. Notice how usually when you get a correct Fibonacci, it kind of plays out a beautiful 1 to 2, with medium risk stop loss. I mean, that's a very conservative stop loss, but usually if you are going to break above the 79% level, you are likely to go ahead and continue. So if we can see the market break below this zero level at 192.5, then what I would look for is a break retracement and then a continuation based off the previous leg right here. So it'd be kind of like something like this, and something like that, for example. Okay, and again, GJ, when it comes to GJ, guys, we've been absolutely smashing it with our live trades. Literally, I completely forgot to tell you guys, when it comes to these live trades, you can literally see the insane results right here, right? You guys can see the take profit 5 we've been smashing. We've been on a crazy win streak, and you get access to this for free once you join the Funded Fast EA. Literally, we hit a 1 to 20 risk reward the other day, and again, these are pure live in the flesh during my London lives right here. You can see that for yourself, September 18th. And again, you get this for completely free once you join our automation program. Literally sending out you guys an entry, 10 pip stop loss every single day, so you guys know what the fixed take profit is, what the fixed stop loss is, and it goes ahead and actually prints like crazy, right? I could literally show you this for days, but it'll take literally too much time. But we've been on a win streak now with over 30 RR gained over the last 2 to 3 months. I can't even remember, I've lost count, but you guys can see all the proof, all the results right here. And again, join the Funded Fast EA group and you'll get access to this for completely free. So yeah, that's pretty much it, guys. GJ, I've gone over UJ, I believe. Or right now, UJ, I don't really see anything too clean for this. Yeah, it's kind of just trending. I mean, you could look for a potential small buy right here, but it's not really looking too clean for me. However, once I do mark these up fully, I'll be able to give you guys more trade ideas on this. But as of right now, kind of going off the dome, UJ isn't looking as clean as GU and EU and GJ. They're kind of looking a bit cleaner. NAS 100, however, I haven't also marked this up just yet, but in fact, just straight off first glance, I'm liking what I'm seeing here. And looking at these higher lows that are being sort of maintained, you can obviously tell we are bullish on the 15. So what I would look for is a cheeky little quick scalp sort of buy you can go for, I guess. I don't know why it's not. So depending on how far this extends, you could then look for retracement into this fair value gap if you see some confirmations around this region here. If you see some confirmations around this region, you could then look to continue the market to the upside. If not, I would then look at this obvious point of interest right here. At this previous high, let's go to the 4 hour. And you can already see how clean that looks when it comes to the resistance level. And that's what I see right here. Literally, that is a resistance level right there. And it lines up pretty perfectly. So yeah, what I would like to see on NAS right now is actually once it breaches this level, once it breaches this high over here, comes up into 2130, then I would like to see it show some sort of rejections here on the 15 or the 5 minute, and based off the structure there, go for a potential short, right? But up until then, it looks like clean buys over here. We've created clearly a level of support here, maintained a higher low, and now we've successfully made a higher high according to the 5 minute structure. So based off of this right here, I would then look for a pullback to go long. But yeah, that's pretty much it. I don't want to make it too long. I hope that, gave you guys a bit of an insight as to how I'm looking at the market right now. Again, simple and easy, not something overcomplicated with 1,000 different models. Although I do know a lot of models off the top of my head, and sometimes these are some things that can maybe help you guys. Mechanical rule-based strategies are also very good. But for me, I just like my systems being simple, structure-based, support and resistance-based, and seeing what the liquidity is saying. Liquidity is also a nice clean way of understanding what the structure is telling you. But yeah, overall, that's pretty much it. We've got the markup on gold right there. And overall, again, when it comes to getting automation, guys, take advantage of what we have available here. Nobody else has what we have, right? Full one-on-one support, daily settings from our developer. It's been in progress with tons of results for the last 1.5 years, and only for the last 2 months right now, we've done one public launch. The only way to get access is if you apply. Look out for an email, message the team, get back, and if you don't get back to us, your seat will be taken. This is something that's in crazy demand. And remember, I'm going to be giving you guys more and more breakdowns if you guys can also go ahead and give me some positive feedback on my content. I'm posting on Instagram right now. Another YouTube vlog is coming. It's looking absolutely insane, and I've got my content team working very hard. So again, I would appreciate you guys showing some support. Join the groups in the free Telegram, share it to your friends, anyone that you think can benefit from this. And again, keep your stuff, keep your results, keep your system simple and repeatable, because then you can get consistent measurements. And when you can get consistent measurements, you can consistently review it, journal it, and then reapply it. Okay, please listen to my advice. I want you guys to succeed. Okay, you've got everything at your disposal right here. You've literally got me mentoring you for free right now, showing you guys trade ideas. Take a leaf out of my book and don't just look at my levels, don't look at my support resistance levels. Go ahead and go into a blank chart yourself and apply the same sort of methodology I've been teaching and see what you can do. At the end of the day, it's you versus you in the market. I'm not here to help. I'm not here to hold your hand and literally, put these lines on for you and take the trades for you. It's all about you. Trading is 100% execution, and the sooner you realize that, the sooner you'll be successful. would have, could have, should have does not cut it in this game. I used to be one of those guys. Oh, I would have hit a 1 to 55 million trade. I would have made $20,000 in this trade if I just held. Guys, the market doesn't care. Would have, could have, should have means nothing. So please take advantage of the market. Be brave, be courageous, and the market favors the brave people. The brave ones, especially with in the day and age of prop firms, and when you've got literally AI making money for you while you go to your day job, you can take the risk. Literally, our clients right over here are making thousands of dollars per week, and that can afford them a new challenge. Literally, you could blow that challenge and not even care because that money's been made passively for you. And that's not an overstatement. I'm literally going to say these things with my chest right now because I have the confidence to do so based on the results our clients have been doing. And not only that, we've got withdrawals as well. So again, don't want to keep it too long, but I hope this video has helped you guys. Again, drop a reaction to this video if you liked it. I'll be dropping more over the course of the week. And guys, remember, I'm not going to be dropping like every single day new breakdown because the market isn't giving these A+ setups right now. Gold has given us a great breakdown, a great trade. I've broken that down, give you an outlook, and same with GU and EU, they're looking very good. Same with GJ as well. UJ not so much, NAS 100 looking decent. I'll keep you guys updated with my analysis right now, and yeah, kind of go from there. Hope you guys liked it, and yeah, see you guys in the next one. Peace.